Canada First Sovereign Wealth Fund. It's called the Canada Strong Fund. The name obviously has a lot to do with marketing, I'm sure, but typically a sovereign wealth fund is a bit different than this. So typically a sovereign wealth fund will be funded by government surpluses. So think about Norway with their oil and gas revenues or the UAE. So they have these sovereign wealth funds, but in the case of Canada, it'll be funded with debt because the Canadian government does not have a surplus. And I think a more appropriate term would be a strategic investment fund. And clearly the idea is that the government will have to borrow money. They'll have to issue bonds to pay for this. So the idea is essentially investing in Canadian projects and companies that will also offer a good return, hopefully a higher return than their borrowing costs. So they're essentially doing this a little bit on margin. It doesn't mean that it'll be a net contribution to deficit because clearly if they do have some returns and some investment gains, it could be beneficial for them down the line, but it just remains that they're still borrowing money or they will be borrowing money to make these investments.
I mean, they're borrowing to fund it. So not really the same as the other two countries you brought up in any regard.
No, exactly. I think there's also Singapore that would have one. There's a bunch of examples worldwide here, and there will be an initial federal contribution of $25 billion. The stated goal of the fund is to focus on building Canada and achieve market returns for Canadian. It's actually nice in writing, but much harder to achieve in reality because the likelihood is that these are two competing mandates. So at some point, something will probably have to give where they'll have to put priority in one or the other mandate. They're looking to have their cake and eating it too, but we see time and time again when you have two mandates that can be a bit diverging because people may say, well, why not? Why can't you do both? The reality is oftentimes if you're really doing strategic investment to grow Canada for the future, these investments could take a very long time to actually provide some returns. And sometimes they're not really investments. Sure, you may get some returns in other way economically, but you may not actually get returns on your investments. So I think this is where the two mandates is a little bit of a head scratcher here. The fund, though, would invest strategically alongside the private sector in Canadian projects and companies. And the companies is really key. So that is a little bit from the US playbook. Obviously, Canadians are not fans of the US government right now as a whole of Trump. And rightfully so. Obviously, they're rattling a lot of feathers. I don't need to go over everything we've seen since Trump took office back last year. But the reality is, this is their playbook. They've have stake in Intel. I think Steelco, or maybe not Steelco, but they have a stake in Steel Company. Can't remember which one.
Yeah, didn't they buy a piece of a gold company as well, or no? I can't remember.
I'm not sure, but they have a piece into rare minerals company as well. So this is nothing new here. They're actually, I think to me, it's very similar to what the Trump government is doing, where they identify strategic companies or industries and they make investments, actually equity investments in those kind of companies. The type of projects that they would consider investing in are projects relating to clean and conventional energy, critical minerals, agriculture, and infrastructure. The returns of the funds will be reinvested in the fund and other projects over time. They may also consider other sources of capital for the funds, such as unlocking the value of federal assets and asset optimization. A word or two words, asset optimization, that doesn't really mean anything, but that's okay. They like to put it in there because that could mean a whole slew of different things, but that's okay. That's political talk. Now, just to be clear here, I don't really care that it's a liberal or if it would be a conservative government doing this. I would approach this the exact same way. I think it's just there are some limitations to what they're trying to do, and politicians will be politicians. They will launch a retail investment product that will allow individual Canadian investors to participate in the fund and benefit from its financial returns. I would assume that the fund will likely have a dual structure. They're going to have the government stake, the retail investing stake. And then maybe even like institutional stake. I can see them having encouraging institutional investors like pension funds or large corporations and joining in on that. I'm not exactly sure how it would work. They didn't provide all that many details just yet. They said they would be providing more details in the coming months. And then the returns from the projects, whether it's dividends, interest, capital gains, get distributed to each of these stakeholders based on ownership. Retail investors would likely have the option to reinvest the returns in the fund as well. Still curious to see what the structure will look like. But my honest take here before we move on is this means the government will be using board money to put into this fund, like we just talked about. So we'll have to see how this affects the budget. I don't think they really talked about that all that much for the spring update. I have some reservation if this will be well managed, and there are definitely certain risk of misappropriation, mismanagement, inefficiency. I mean, you are dealing with a government. So even if they try to do everything above board, if you dealt with a government, you know there's a whole lot of red tape. Like it's not as efficient as the private sector. The reality, though, and I will give the Carney government props for this, and I think a lot of people that don't love this government kind of forget to talk about this part. But the reality is there are just some large scale projects that probably just can't be funded by private investment alone. That's just the reality of things, right? Like it just, you can think of a major project, like if they were to build a pipeline from Alberta all the way to the east, I'm sure there'd be private sector companies that would be part of it. But I don't know if that could be done solely by private investments. Like that is a real question. Like I'm not quite sure. If you start doing a high speed train that goes from extremely long distances, like I don't know if these can all be funded by private sector. And I think that's where the fund like this could be useful. And I think people that are completely against it are missing this point. I think there's countless example in the past where the government has to step in. I mean, if the private sector could do everything, like all our roads would be private. Like,
Yes.
yeah,
Nobody
it's,
will fund it.
no,
Like they're
exactly.
yeah.
So it would not really be feasible to have all these roads private and have tolls everywhere on residential streets and so on. So that's just an example. So I think the key will make sure that there's a strong investment process in place while also being efficient in its capital allocation. Not an easy thing to do, but potentially with AI, for example, new AI tools, maybe there are ways to speed up the process while keeping a high level of transparency and prudent capital allocation and all of that. So that's kind of my big take from the retail product perspective. I think this would only make sense if you're a retail investor, you want to support this fund because I think the likelihood of underperformance is quite high because they have those two goals. If you're comfortable with that, but you really want to invest in that because you want to help grow the Canadian economy, that's fine, but just don't necessarily expect world beating returns.
Yeah. Well, I think that's the conflict is the two mandates. Like there's going to be a lot of projects that really don't provide all that good of returns. So they don't get much capital that contribute to the country's growth, but will not provide market level returns. So, I mean, the one good way, and I haven't read into this all that much, they could probably make it more popular is tax shelter it.
Yeah.
Make an investment in it tax free, I imagine, because then you can earn returns below market returns and come out probably say net neutral. But the interesting thing is like how, in terms of the public companies, like what companies, how do they pick them?
It's supposed to be set up as an independent independent arm's length crown corporation,
like CPP and same
yeah,
sort of
like
setup.
like BDC, Export Development Canada.
Yeah.
There's a bunch of different crown corporation that are arm's length, but I know enough about crown corporation to know that the shareholders, those crown corporation is the federal government. So they always report to the federal government. You can say it's arm's length all you want. The reality, it still reports to you. So sure, they have a mandate, but there's always going to be space for some direction coming from the top, like, okay, we really want this project, like make it work. Like
Yeah,
that's yeah,
we got to save some jobs or whatever it may be. You know what I mean? Like they did that with I can't remember that steel company that they ended up loaning a bunch of money to. So does there come a conflict in there where they're looking to save a bunch of jobs on a project that's probably not going to yield all that higher returns? That's where you get that conflict in terms
yeah.
of the two mandates. Yeah, it's an interesting fun. I think tax sheltering it would be a no-brainer to me to make it more popular. It'll be
No,
interesting
I
to
think
see
that's
how
a
it
good
goes.
point. Yeah, you tax shelter it regardless whether it's in a
Yeah, like could you
register
buy this in a
account or not.
TF? Like
I'm sure
I
they
don't know
will
how it would
allow it.
work. Yeah,
Why not? I mean, it's the
yeah,
federal. They're the ones who created the TFSA, so they can definitely make sure that it's
yeah,
legible for those accounts, or they can just say, you know what, maybe you're right. It's just basically, or you get maybe it's not fully tax shelter, but maybe the intent in terms of getting, let's say, a capital gains tax on half of your gains, maybe it's like on only a quarter of your
yeah.
gains,
Give
right?
some
Like it
sort of
could be
incentive.
some sort, or you have it in your TFS and then it's fully tax sheltered,
Yeah,
like
like if you
something like
want
that. Mhm.
big money flowing into this, yeah, get it. Give some sort of tax incentive to do it, and then you get more capital into Canadian companies, Canadian projects.